This is the Bitcoin Made Simple podcast. Here's your host, Corey Tusick.
Hey everyone, and thanks for listening. This week's episode, I interviewed Preston Pysh. Preston is part of the Investors Podcast Network, and he's been doing investing podcasts for probably about 7-8 years now. And obviously in the Bitcoin world, a lot of people know who he is. And he's had a great influence on helping me understand things. And so I thought it would be great to have him on the show. Also, we have a little bit of a different opening because the first 10 minutes or so is about the fact that Preston is from Pittsburgh, just like me, and grew up in this small little town that happens to be a small little town that my family is moving to. So yeah, we had an interesting discussion about all things in this little town. And then, but yeah, when we talked about Bitcoin, we really got into the QE levers and how that he does a great way. He explains it really well of, why the Fed has to print money and helps you understand why they're really not able to turn that lever off. And then, we also talked about what if we didn't have Bitcoin, what that world would look like, and with the dollar being pegged to nothing, how that affects every country around the world, geopolitically and all that kind of stuff. And then also he brought up a cool analogy about proof of work, not just proof of work for Bitcoin mining, but proof of work for, basically everything in life and how that leads to greater value. And then also you'll notice at the end, when it sounds like we're signing off, don't go anywhere because I actually just at the spur of the moment, we basically signed off at the spur of the moment, crossed my mind to ask him about patriotism. It's something that I've been, talking a lot about with friends of mine that either served in the military or maybe police officers or things like that. Just because, right now with everything going on in the world, there's a lot of difficulty with people feeling good about their country, so it's not that I don't love my country. It's just like, it's hard, I think we've all been experiencing this whenever you sit there and every day you look around and you're like, wow, this is a bleep show, for lack of a better term. So, it's kind of it's a good perspective that he gives, and I actually would recommend everybody listen to it because he kind of pulls back, looks at the macro view, but also, as you'll hear, kind of gets into how Bitcoin and money is involved in all of this. So, I really appreciated him answering that because, it was kind of last minute. Just popped into my head. So hope you guys enjoy this episode. The sponsor for today's episode is Coinbase Connect. Do you have questions about Bitcoin? Personalize your learning and book a one-on-one video call with a Bitcoin pro on Coinbase Connect. Learn about mining, security, the Lightning Network, DeFi, taxes, and many other topics. It's really easy. Choose your topic and pro and select the date that you're available and bring your questions to the meeting room. Book your first call today by going to Coinbase.com and clicking on the Connect tab. Be prepared for the financial revolution and get the knowledge that you need. Thanks again to Coinbase for sponsoring the show. If you want to get in touch with me, my Twitter handle for the show is @BitcoinSimply. My personal one is @TusickCorey. I don't really use that one too much. And then if you want to email the show, it's bitcoinmadesimplepodcast@gmail.com. Thanks. 7 hours, just like all over the place. And my buddies are
no sweat at all. Yeah. No,
I'm so glad. I would have got pinged, like 15 minutes beforehand. But like when I saw you ping, I was like, oh my God, hey, that is tonight. And I totally blanked on it. I thought it was the 19th in my head. And so, yeah. We have a different opening. I want to thank you for coming on, but this is going to be a little bit of a different conversation than I had with anyone else in the Bitcoin world to date. Are you from Pittsburgh originally?
Yes.
Born and raised. Yeah, that's
born and raised. Now, not like downtown Pittsburgh, but from like the Pittsburgh area, like within 30-minute,
Okay.
Yeah.
So I have to tell you how I think we got connected because Princey, I was talking to him and he said to me, dude, he's like, if there's one, podcaster you could interview, who would it be? And I said, it would be Preston Pysh, but it's not for the reason you'd think. I was like, this is going to sound really weird. And he goes, what do you mean? And I'm like, I start telling him the story and he just starts cracking up. He's like, oh my God, you have to talk to him. So, following like all of you, and I'm sure you remember what it was like when you started your podcast,
Yes.
And for anyone that's starting a podcast, this is good advice to like, you just got to get out there and, ping people and don't take it personal. You send a message. If you don't hear back, it is what it is. Like I sent Gigi a message in like February and he got back to me in like June and was like, hey, let's record next week. I was like, okay.
Yeah.
So, that's just how it is. And I totally get that. So one of the ways I thought, I wonder if he's up Preston, see if, I found some people in that way. And so I go on and I see the skyline in the background, like you're on your, just the city of Pittsburgh. And I'm like, oh my God, like he's from Pittsburgh. Like I should have known, like, cause I won't tell you, I could hear it a little bit, like if you're from Pittsburgh, know. And I won't tell you which words so you don't have it in your head whenever you're talking in the future.
But I'm pretty sure I know which ones.
Yeah, it's us Yinzers have a little bit of we know what we sound like. So that's one thing. So Pittsburgh, I'm like, oh, that's cool. And then the town you had listed was Pennsylvania. So that's where you grew up, right?
Yeah, that's where I grew up.
Well, my wife and I are like in the process of building a house there. And like I'm bleeping the specifics out for the listeners though. This is like a town of how many people?
Oh, it's small. I mean, you're definitely under 500.
Oh yeah. Yeah. Like very, very small, rural, Pennsylvania.
There's not even a stoplight. There's only stop signs in the town. Yeah.
Yeah. Yeah, exactly. And, so I was telling Princey this and I said, when I saw that, I was like, oh, that's really bizarre. But like, I really need to like, probably if I've pinged him already, I maybe tagged you on Twitter or something. I was like, I got to have an interview with him. And then, so then I went to go to contact you on there and it had a phone number. And I was like, I don't know if it's your real one. So, again, this is all being bleeped.
Yeah.
But I was like, oh, maybe this is his real number. Maybe it's, business number or whatever. Give him a call. It was just like a standard voicemail, left a voicemail. And then, yeah, that was like, I told Princey after that, I was like, I started like panicking a little bit because I was like, I'm going to move to and if he lives there, like he's going to see me on like, if he doesn't respond, he's going to see me on Main Street, like, hi, Preston, will you be my friend? Like, just like, I was like, oh my God, I like all of a sudden look like this stalker, that like, so yeah, I told him, I was like, there's one person I want to interview, but it's not because of why you think. It's because he's gonna, if he happens to live in this town that of 500 people and he sees me, because inevitably everyone then knows everyone, right?
Everybody knows everyone. Yes.
Yeah. Yeah. So do you know by chance or construction?
I think I know who you're talking about. Yes.
It's yeah, he fortunately they've been really nice, and not to get on the personal end too much, but like they've been really good, because my mother-in-law was diagnosed with a like really, really serious form of cancer at the end of May. And we were rolling along. We were ready to go, and they could have sold the property to somebody else, but they told us, they were like, yeah, take your time, like we know you got a lot
wonderful
to go through, which is, through and through. It's like, I love that community.
Yeah.
But yeah, they are being everybody's so welcoming there. It's such a nice little community. It's right by where
yeah. Oh, I know. Yeah. I mean,
okay.
Yeah, I know the there isn't a name or person in that town I probably haven't heard of.
Yeah. I think there used to be farmland, and so bought it and is turning it into 13 plots, and like ours will be basically tucked in behind where the old lives. And so he said, oh yeah, he's gonna be your best friend, like going over and giving you tools and all that kind of stuff. I was like, man, I love that, getting out of the city and just living somewhere that people are going to be friendly and
yeah, I know his son. I mean, yeah,
dude, that's wild. So well, yeah, once I figured out you weren't there, I was like, okay, pressure's off. But yeah, it wouldn't have been weird if like at the pet parade or something, you were like, oh my God, there's that guy.
Pet parade. I remember as a kid, every year, I mean, I was in the pet parade. Yeah. I mean, that there's like never missed a one of those.
Yeah, never missed one pet parade. And they have a good,
and people probably are wondering what in the world we're talking about. So like once a year, everybody in the town dresses up their pet and they walk them right down the main street. And there's judges there and everyone's trying to like win for their pet that year. I mean, it's just, you can't even make it up.
Yeah. It's like people take their fish.
Yeah.
My wife's from Butler,
I went with
so we've been
neighbor,
there.
My neighbor and I, my neighbor did not have a pet. Well, he had a pit bull as a pet, and he wanted to take something else for like his little sister, and like he literally took a pet rock and he pulled that right down Main Street. It's crazy.
Oh, that's wild. So as a standard Pittsburgher question, I got to ask you: are you Pirates, Penguins, and Steelers fan, or you into sports? Or
so as a kid, I was with the Pirates. I played baseball as a kid, and the Pirates were kind of decent as I was growing up. Now
90 through 92.
Yeah, and then they played the Braves and lost.
Sid
Bream. Yeah. So I was a Pirates fan. Haven't really tracked it too much because they haven't really done so great since, but Steelers fan, obviously. And then I was just never really into hockey all that much, even though Mario Lemieux was, obviously an unbelievable player, but it wasn't something that I played. So I just wasn't into the Pens all that much.
Yeah. Well, and I'm wearing a Steelers shirt, and it has nothing to do with the fact that they have a preseason game going on right now. And I'm talking to a Pittsburgher. Well, like I said, I'm so out of the loop. I had, right before you jumped into the room, I had 50 text messages from my friends. I'm like, what are they texting me about? And they're talking about the Steeler game. Like there's a preseason game happening right now. It's like, I don't have enough time for preseason anymore. Regular season playoffs. Let's do that. So anyways, so I got the Pittsburgh questions out. And if I ever do, we're going to try and do a Bitcoin night at PNC Park. So if you're ever be interested in that, we're going to do like I talked to the president of the Pirates and trying to set up for next season, have like a Bitcoin night, and then people can do a Q&A afterwards and like come down and ask questions. And CJ Wilson said he'd come and stuff like that. So,
oh, wow.
Yeah.
That's
so
pretty cool.
I don't know if you ever head up this way, but if you ever do that, I'm sure that would be a fun event and, get some people.
You'll have to let me know the dates you put it together.
Yeah.
That'd be pretty neat. Yeah.
So anyway, first question, first thing I got to tell you Bitcoin wise is quantitative easing. How long has that been going on? Because that I heard you bring that up on Peter McCormick's podcast like a year or so ago.
Mm-hmm.
And I literally like stopped the lawnmower and I was listening, like cutting the grass, stopped the lawnmower, started Googling like, what is quantitative easing? What is this?
Yeah.
And that's what made me become like ape into Bitcoin. So I was like, what?
Yeah. And this is, so when you go back to the 2008, 2009 crisis, and this was such a huge event. If people weren't in the markets and participating in the markets back then, you got a lot of young people in Bitcoin, so they probably weren't. This was this event that happened in 2008 with the banks, falling apart, the credit default swap market. It was just a disaster, and the banks weren't trusting each other through all of this, so they weren't lending to each other. The overnight lending between them, it was broke.
That's crazy.
To the point where if the government didn't step in, like you were going to have a global meltdown in the global economy. And so, Bernanke and all them, they're going on the Hill and they're, I remember this really well. They're going on the Hill and they're saying, hey, we have to print all this money. We have to insert this in. We have to recapitalize these banks. We got to give them liquidity so that they're comfortable lending to each other. And so this was really kind of like the first instance that you saw this quantitative easing idea, the recapitalization of banks happen. And then it just never got turned off. And I think that's the part where I was watching this. I obviously wasn't nearly as well versed in financial markets today as I was way back then, but I knew that what was happening was manipulation to prevent a global collapse or a systematic collapse. And it wasn't allowing a free and open market to actually remedy itself. So part of a free and open market is if somebody goes out and they lever themselves too much and they're unresponsible with their borrowing, well, then they blow up, and then somebody comes in and buys the assets of that company at a fire sale price. And if it's 30 cents on the dollar, well, it's 30 cents on the dollar, like whatever the free market, like,
yeah,
says it
that's
should
what a
be.
free market should be, right?
That's what a free market should be. Well, you didn't have anything of the sort. And what, anybody in finance was yelling was, now you're getting into this idea of the government is picking winners and losers because they're so big that if they let them fail, that you're consciously making a decision to allow this global meltdown. So so the excuse is that they have to step in and conduct this action. Well, they do this, and they do it in epic proportions. It looks like a total joke now, relatively speaking. The amount that they inserted, it was like $1 trillion, right? And like we just passing a bill in the Senate for like 3 point something trillion, and like barely
like
even
it's
makes
nothing.
a headline. Like it's nothing, right? So, well, the issue that you run into, so they had to drop interest rates down to zero. Okay, because that assisted, because going into the 2008, I want to say in like early 2008 is just at the first quarter of 2008. I want to say your interest rates were probably around 5% across the board, across the whole duration of the bond yield curve. So you were like overnight money was 5% lending, and 30-year bonds were 5% lending. It's what you call an inverted or a flat bond yield curve, which is usually an indicator that you're getting ready to go into a recession. At least it was for the 30 or 40 years preceding this event. So, because it makes no sense that like if you borrow money for 30 years, it should be the same rate as like an overnight rate. That doesn't make any sense.
Take that deal any day.
Yeah, it doesn't make any sense for the person who's borrowing long term. But so those were the rates going into 2008. So when this big systematic event happened, they were like, all right, well, we're taking overnight lending rates to federal funds rates down to zero. And then that'll move the rest of the duration of the curve down really low to like 3% range or whatever. And not only are we going to do that, but then we're going to recapitalize the system. So with inserting all this liquidity of $1 trillion into banks and everything else. And so they do this, and you get a really quick bounce in the stock market. So I would say, I'm trying to remember my history here. I would say late 2008, very beginning of 2009, like January, February, you had the market sell off to about 50% correction is what I would say it was. Maybe a little bit more, maybe even like 55% correction in like the S&P 500. On the Dow Jones. But once it bottomed there at the very start of 2009, you saw a swift recovery and a bounce back from that low going into the end of 2009. You saw a substantial, it might even carry it out into maybe the summer of 2009. But like the sell-off really kind of only lasted, I'd say from the very top of the market to the bottom, you were probably about a year of really hard, strong selling. And then most of that happening into the fall of 2008. But where it really started to get weird for me on the recovery is, so the market's bouncing back. I want to say in like the 2011, 2012, Europe started getting a little strange where they were having some issues in the banking sector. They're going through all these regulatory changes and requirements so that something like this never happens again. But the one thing that they just never seemed to turn off was the quantitative easing. So they're like, oh, well, let's just print a bunch of money. Let's step into the bond market. Let's keep buying bonds. And by doing that, they're pulling that quote unquote asset off of the market, and they're just providing all this cash into the market. Well, the problem that you run into by doing this, especially doing this for over a decade, like they have at this point, is you're stuffing that cash straight into the hands of the people that own those bonds. And it's not like that's necessarily going to trickle down into the rest of the economy. So if you're there, middle class type person working 9 to 5, like, you don't own those bonds. No. So you're not receiving this cash, and you're definitely not receiving the premium. Because think about it. If there's a person, if there's an unlimited amount of buying that's coming into this, and I'm calling it unlimited, but they're constantly coming into this market and buying it. They're bidding the prices higher. They're pushing the yields lower. And as the yields on the bonds are going lower and lower, just like your house, like if you went out and you had a 4% interest rate on your house, a 30-year mortgage on your house, and then all of a sudden the bank comes and says, we can give you 3%. Well, now all of a sudden you can afford a bigger house, right? You can go out and buy a house that's more valuable because your payments that you're making every month are the same, but you can own something that's of a higher price. And so that example that everybody understands from a home ownership standpoint is the same exact thing that happens for anything that's equity based. So that's stocks, it's real estate, it's commercial real estate, anything that has equity to it is going through this situation that as interest rates are continuing to get pushed down because central bankers are stepping into the market and buying bonds, pushing yields lower, interest rates lower, and prices on those bonds higher and higher. The prices on anything that's equity based is going up with it. And then think about the competitive nature of, like, let's just say that the housing of like where you're at is the average house is $250,000, $300,000. Well, if interest rates go down by 2%, like now all of a sudden everybody can afford a house that's $100,000 or $200,000 more expensive, which then pushes the whole market into that space that had a much smaller concentration of inventory, which then is jacking the prices even higher. So like these fundamentals that everybody can kind of imagine on a real estate basis, it's just applying to the entire stock market all at the same time. So they do this for a decade, right? They never let up. They never let up. Which, by the way, most people don't know that. No, they have no clue because it's not real for them. It's not, you say quantitative easing, you say bond market. Like how many people were involved in the bond market with 1% interest?
Nobody.
Right? Nobody. Like you have Wall Streeters that are buying like literally $1 billion tranches of bonds. And so like they're experiencing this, but then the person who's sitting there at that trading desk, they're getting paid a salary. It's not like it's their equity.
Doesn't matter. Yeah.
They're sitting there like, oh, okay, well, the rates just keep going lower and I just keep finding more people willing to buy these things and I'll just keep on selling them. So
they've been doing that for 10 years and
they've been doing it since the 2008, 2009 crisis. And now you're at the point where now it's even getting weirder. Okay. So for a decade, it was just QE. So they're inserting all this liquidity into the system and they're doing it via this quantitative easing methodology that's basically stuffing just straight cash into the hands of the wealthy who hold these instruments, assets. These bond instruments, and then all the assets that are getting capitalized higher and higher in value because interest rates are going lower. So this money that's getting inserted, the cash, I shouldn't say money, I should say the currency that's getting inserted into the system, what it's doing is it's appreciating the value of anything that's equity based. And if you own something that's equity based, you see your net worth going up, but is that net worth that you can actually like step out into the market and kind of use for spending or buying without having any type of tax implications? And the answer is no, unless you want to sell it and pay an enormous capital gains. And then you're dealing with like your long-term savings and disrupting that to subsidize your living expenses, which people don't necessarily want to do. So long story short, the easiest way I would describe this is you're trying to put liquidity into the system. But the problem is it's not actually getting into the system in a liquid kind of way. The way it's getting into the system is through capitalization rates and appreciation of net worth on paper and in your savings account of like your Fidelity account, like that's going up. Now, and you have to be an equity owner for that to occur, right? And so as that gets more competitive, what it's doing is it's gutting the middle class because the middle class isn't able to do this in a way that's meaningful relative to your top 5%ers that have all this equity. that continue to receive this cash flow and this recapitalization of asset prices and all that kind of stuff. So that's how I would describe the quantitative easing piece. Now, what they've discovered more recently is that, and I think we always knew, we've been talking about it for years. Anybody that you follow that's a really smart financier knew that like all roads lead to this universal basic income, helicopter money outcome based on them pushing interest rates down to zero. And so across the whole duration of the bond yield curve, not just like overnight money, but then you start getting out to like 30-year money and it's yielding like 1%. Like you get to a point where now it's like pulling a lever. Like think of the central banks. They got two main levers that they can pull once you're getting into this point where the whole currency's broke. The two levers they can pull once the currency's broke is they can pull the QE lever where they can buy the bond market. The other one is this UBI, universal basic income lever. And they come up with these fancy names so nobody cares to understand this or do the research. But
stimulus.
it's confusing enough that it's just like, oh, well, UBI. Well, what is that to your typical person? But all it is we're going to print a bunch of money, and instead of stuffing it into the bond market and wealthy people basically being beneficiaries of this, we're actually going to just start delivering checks to every single person in the United States, or if you're over in Europe, they're doing similar things, right? They're just going to start mailing these checks to people directly. And now that's how they're inserting the liquidity into the system. Now, go ahead. You had a question.
No. I was going to say, which is just crazy. Like, it's
nuts.
I can't believe that this is, I'll let you continue. But yeah, that was the thing that like I told Guy Swan, I was like, that was my moment of like, I don't have enough chairs. I got to sell more chairs, because I went down that rabbit hole, and I think I probably spent a week researching quantitative easing after I heard that for the first time. And I was like, this is all going to explode. This is done. It's over. Game over. This is done. And I'm not like an economist. I was like, mathematically, this doesn't work, which I just interviewed Greg Foss. So, it was all math, it was all mathematics. But yeah, so go ahead.
Okay. So on the UBI front, once you start mailing these checks out, it's pretty intuitive for anybody that's watching this saying, okay, this doesn't add up. This doesn't seem like it's going to end well. Well, what you're doing is you're putting these perturbations into the economy that now people don't want to go work, or if they are working, they want to get paid under the table, or, let me go get hired for 2 weeks and then get fired so that I can collect unemployment plus the UBI kicker that's now been
$600. Yeah.
Yeah. So they're getting that. And so like you're putting all these things in place because the middle class and lower class, which is a majority of the population, is suffering relative to the growth and the capitalization rates of the equity and the few people that can actually own that equity. It's not this equal distribution of wealth. It's very skewed if you were going to plot it on like a bell curve, that the ownership of the wealth in the world is owned by such a few amount of people at this point because of these actions that have been taken for a decade. And I would argue they even go back further than that. That gets into a much more technical conversation that people will argue with you on. But in general, you can pull that QE lever a bunch of times. It's going to consolidate the wealth into the hands of the wealthy. You start pulling the UBI lever, now all of a sudden you're getting all these distortions in supply chains and people not wanting to work. And like, so there's tons of issues in that regard, right? Like neither one of these are good solutions. But I'll put it this way. If you have no alternative, which I would argue you had no alternative prior to 2008 as to how this could be resolved on a global level, you didn't. Now that you have Bitcoin in place, I would tell you there is a solution to how this can be resolved in a way that's completely decentralized, and like one country doesn't win more than the other. That would be a fair way to reset the system. But kind of where I was going with that idea is they had to be playing with these levers, because if they chose in 2008 to not play with the two levers, the UBI and the QE, like you are consciously deciding to blow up the global economy, and it would seize up, right? So it's very easy for people to go on a show or have a discussion and say, oh, those central bankers are the evilest people in the universe. They ruined everything.
Mm-hmm.
And to a certain extent, it's a true statement, but I think it's way out of context if you don't look at it in the breadth of like probably 80 years worth of decision making.
Yeah.
Right? Like the people at 2008, the Bernanke's and the whoever's that they
didn't set that table.
They did not. That's right. They did not. And people would say, well, then it was Alan Greenspan. I can show you some charts and I can do some analysis that it was even before Alan Greenspan. And like the whole history of, because if you really want to get into it, it's like, well, why did we come off the gold standard in 71? Greenspan didn't have,
Yeah.
Right. Well, the reason we did is because we were manipulating the currency against the benchmark gold standard that we had set ourselves. And so like, it's a really slow progression of manipulation that had occurred for decades that then led up to these culminating events, 2008 till now, where these central bankers that are in power and globally are doing this coordinated effort to prevent the global economy from just totally straight melting down.
Yeah. So I agree with you, like they have no choice at this point.
They have no choice.
Like,
could you imagine? Well, let's just put it this way. Like, look how beneficial it is for somebody who owns a house. If interest rates go down 1%, you go and you refi your house and like you drop your payments by $200 or $300 or whatever, depending on the value of the house. And now think about what would happen if we went the other way. What if interest rates went up 2%? Could the American household handle that, considering how in debt up to their eyeballs they are and how levered they are? There ain't no way in hell that the typical American household could withstand 100 or a 200 basis point move on their real estate price or on their loan rates. Mm-hmm. So now think of it from a sovereign debt standpoint. So now we've got this political situation where both parties have learned that if they vote themselves money into their districts and outspend whatever cap exists, their chances for reelection are way higher. And there's nobody from their district telling them, you need to be responsible with your spending there on the Hill. Like, ain't nobody. In fact, they're saying the opposite. They're saying, where's my money? Where's my check? Mm-hmm. Because you better get in there and pass another $3 trillion bill.
You're giving it to everybody else. Why
that's right. That puts more money into my pocket. And so you have this cognitive, just total lack of knowledge for the people that are alive today that did not grow up in the Great Depression. Mm-hmm. The stories of a Great Depression are completely removed from anything that feels like it could happen to them.
Yeah.
And they don't teach it in school. They don't teach it in college unless you major in business. And then I would even argue that, you go get a business degree.
Do they really teach it?
Do they? Well, they're teaching you discount cash flows based off of a stable currency, which we don't even have.
Yeah.
Right? Like if you go to business school, they're going to teach you all these models and all this stuff on how to determine the value of a company. But in those models is an underlying assumption that no one ever talks about, which is you have to be dealing with a sound currency that's not getting debased at a breakneck pace with trillions of dollars of QE and UBI attached to it. Do a discount model accounting for that, because I would argue ain't nobody but Michael Saylor and a few others that are understanding what that math looks like these days. Mm-hmm. So yeah, that's where we're at.
So we're at this position now where we have to do it. And basically, the way I look at it with Bitcoin is I feel like it's something that was placed, and it's like the safe, secure, like safety hatch, like the escape hatch, where it's like the house is on fire. And then all of a sudden you're like, oh my God, there's this escape hatch down here. Everybody, funnel through here as quick as you can. The more the fire starts burning, the harder it is for everybody to get through that little, more people start panicking to try and get out. It's crazy that, we have this opportunity, because what do you think would be happening right now if we didn't have Bitcoin?
Well, it'd be a really scary time in the world if you didn't have Bitcoin there as the escape hatch. And I completely agree with your analogy there, because that's what it is. Because the path that would probably, I would imagine what they would try to be doing right now is they would try to be going through the IMF. They would be trying, this goes into Jim Rickard's big thesis of using the SDR as like a global money. And what that would result in is no change, right?
Yeah.
It would appear as if they were coming up with a solution to the problem by having this global money, and it would be acting as like this currency basket of euro, yen, dollar, all that kind of stuff. And based on the size of those various fiat currencies, you would have them all kind of like conglomerate into this basket that would be measured against the SDR, the special drawing rights out of the IMF. But that special drawing right could just be debased against all that basket. And so like, you're not solving anything in that scenario. You're not going to have some type of international organization like the IMF be able to look at any one of those countries and say, you got to stop debasing your currency because it's in this basket and you need to start being responsible. Because if they tell one of them that, all of them have to do that.
Yeah.
But it's a tragedy of the commons situation, right? The idea that each person has an incentive to devour the other's resources. In this scenario, you're dealing with currencies, but that's what's playing out here is each country has an incentive to devalue so that they can suck the currency of the others participants into their own domain. Because when they do that, so let me just explain. So if the US debases their currency, what happens is when they sell internationally their goods and products, like let's say I'm just a computer chip manufacturer, or I'm selling corn, or I'm selling whatever the product is, or whatever the service is. If the dollar gets cheaper and I'm living in Europe and I see this, I'm saying, well, I need to go over there and buy whatever because it's cheaper for me to buy it there and ship it to this location because the dollar's so weak right now. Right. So what it does is it attracts euros or any other currency into the US because that debasement happened. As a US citizen, nobody's running around complaining because they're not all traveling to Europe or wherever to notice that difference in the currency exchange, but they are noticing that the top line of their income statement has gone up with foreign currency inbound purchases. Right.
Okay.
So that's what's happening. And that's why every country has an incentive when there's no peg in place. Every country has an incentive to debase their currency just a little bit more than their neighbors so that they can create this vacuum of foreign currency to flow into their country
and suck in the wealth of other countries around them.
That's right. And now what happens? So like, let's pull the thread on that a little bit more. So Europe is now noticing that their euro is appreciating against the dollar, and they're saying, we can play that game. Let's debase our currency, our euro against the dollar, and let's suck those dollars back over here. And so it's this tragedy of the commons amongst fiat currency because there's no global peg. And so having my point is really if we would try to do something fancy with the special drawing rights through the IMF, you're not going to get away from this because
they're not going to,
there's nothing that's, and they're never going to let that body, that IMF governmental like group, global organization, NGO, put any type of pressure to them. They're just gonna be like, get lost, right? So that's where Bitcoin is different, is because nobody can shut it down, nobody can control it, but yet it can supply a fixed peg number of units against this fiat debacle that's a race to the bottom, a race to debase faster than their constituents. Meanwhile, like Bitcoin's just standing there looking at it saying, I'm the same number of units.
Still 21 million.
That's right. And there ain't anybody that can shut that down or tell me to be different.
Yeah. So. And, that's what, I've seen as, even with the whole news coming out of this infrastructure bill and all the garbage that's in there, and the mess that's going to create in the United States. It's like, well, I mean, Bitcoin, like, it's still going to produce new blocks every 10 minutes.
Yep.
It doesn't matter. Like, the US could ban it and it's still going to produce, I mean, you saw what happened with China. China banned it, and hey, what do you know? We're still producing new blocks. That's crazy.
It's amazing.
It really is. And we'll get into the technical side of that a little bit, but like, on like a wider level, it really is weird. Like, have you noticed how it kind of like seeps into, like, I've noticed it's seeping into different parts of life where I'm like, it really is like, it solves so many problems in the world. One of the great things I love about Bitcoiners is that they all want to make the world a better place. That's really a common theme across. So yeah, it's just one of those things where you said, like, oh my God, what if there wasn't Bitcoin? Like, what do we do in that scenario? I guess that's where we start to sound like a cult, because all of a sudden we're like, hail Bitcoin, and all that kind of stuff. But
for me, the cult is the fiat currency.
Yeah.
Like, people who are clinging to the old system, like, I can take that argument and that labeling and flip that mirror right back on the person saying it and be like, you might want to take a look inside before you start saying that we're a cult, because what you're signing up for and the insanity that in the total mispricing of reality is such a, I mean, at the end of the day, when we exchange currency, what we're really exchanging is energy. And so like, when you earn $1, it's supposed to have like this immutable like value to it that's associated with the energy that you expended in order to receive it. And so like, if you're a doctor, you get paid a higher salary, but you also did this test of proof of work of studying all these books and all this terminology and extra schooling and blah, blah, blah. Like, the proof of work associated with becoming a doctor versus becoming a skilled laborer of 2 years of schooling versus somebody who graduated out of high school. Like, there's a reason that person's getting paid a higher valuation per hour of what they've done, because of the energy that they personally expended in order to get to this point, to be able to provide a service that is not something that every single person can do. Right. And so when we think about the fiat currency that's out there, and the fact that you have these Wizard of Oz type entities that are pulling levers, that are inserting these units, these additional units into the system, what they're really saying is, I don't have to play by a rule or a unit that has the same valuation that these people who already had some of these units were playing by when they performed their proof of work. And when you get into Bitcoin, it's
you can't mess with that proof of work.
You can't mess with the proof of work. You can't mess with that valuation process that's associated with the unit of measure that is there. So
you can't falsify the proof of work, and you can't skate by and cheat on the test, basically, unless you happen to randomly guess the number and just write it down, type it into a computer. But what are the odds of that happening? You're an engineer, right? What did you study? What was
aerospace
your field
engineer.
Aerospace engineer. Okay, because my brother-in-law is an engineer. He's civil, but I told him, I said, dude, you got to get into this. And he started following Bitcoin, and I was like, it's an engineer's dream come true.
It really is. Yeah.
So talk a little bit about that, of like, what, from an engineering perspective, when you saw Bitcoin for the first time and you started digging into it, like, what was it? What were your revelations in seeing it?
The thing that the game theory on it for me was just miraculous, of how somebody could get all these different things happening, and then the incentive for all of it was pointing back to further and further adoption until it takes over. And then the energy burn, just like harnessing, Adam Back's proof of work into this. The encryption piece of it is just a mathematical marvel. Whoever developed this thing, I can assure you, is a mathematical genius, whoever that person is. And a master of game theory, a person who understands and thinks about game theory at levels that are hard for anybody to probably even comprehend. So those were some of the early things that I noticed. You could get into just a whole doctorate level analysis of the network effects associated in the understanding that the designer of this would have had as to the network effects that would have matured over the years.
Yeah.
I'm of the firm opinion that the 4-year halving cycle was a deep and profound understanding of Moore's law and harnessing Moore's law as part of the incentive structure. And not only that, but then in parallel, not only understanding that and harnessing that, but then in parallel doing it in a way that would allow the price appreciation of Bitcoin to be a time release fuse, almost like a Trojan horse, to allow itself to gradually, not abruptly, insert it into the existing financial system so that all those financial rails could slowly mature so that it wouldn't become banned by governments.
Yeah.
And so maybe, and I could be giving the designer Satoshi way too much credit. Maybe some of it was just luck in the design, but everything that I look at and then his past writings kind of suggest that it wasn't, and that it was kind of a miraculous and probably one of the most ingenious discoveries, inventions, designs that the world has ever come by. And it's hard for people to see that in a soft kind of way, because when you're talking about software, it's I think a little bit harder for people to grasp. Like when they look at the pyramids, it's just like it's something you can understand. It's like right there.
Yeah.
But like when I look at like what this is, it's on that kind of level.
Yeah. I mean, as much as you try to attack it, and that's what I love about Bitcoiners is they think of every attack vector. Like there's not one. They're like the most skeptical people in the world. They think that this was going. They still think, some of them, I think, it's going to get. It's all going to be a Ponzi. So they're trying to figure out, how is this going to blow up in our face? And they've done it. Whereas you go to the the shit coins, and they like, don't worry about that. Don't look at that. It might be a weakness, but let's not talk about it. Yeah, and the timing, like you said, the way that it gets put in. I jokingly say this all the time, that it's like my 1% theory that Satoshi is from the future, just the timing of everything. Where I was like, because everybody, I making a documentary called Searching for Satoshi, and really it's not to dock Satoshi. It's about to figure out why it's not important, and we'll never find out. Honestly, that's what I believe. We'll never find out, and that's a good thing. But even if he did come out, somebody asked me on a Twitter space last night, they're like, what if the Satoshi revealed himself? What would happen? I was like, probably nothing, a little bit of market, fluctuation that would be different than what would happen if he didn't, but he can't stop it now. So, what's the point, But
which even goes further to the brilliance, because for a person to understand all these different facets of engineering and design, I mean, you have to have a PhD in all these different areas.
Oh yeah, 5 different degrees.
but I think the thing that then really makes you think wow, is the humility that the person or people must have had, and the foresight that they must have had to know that if this thing is truly going to take over as a global reserve status, one of the only ways that could happen is if it remains anonymous. Because I mean, look at Ethereum as a great example of, look at how much queuing that community takes from Vitalik.
Yeah.
And it's for good or for worse. If he comes up with a brilliant comment or idea on what needs to be added, or the dumbest idea ever that needs to be added, that community treats it almost with a religious fervor.
Yeah.
And I think that is actually a liability.
Yeah. Especially in the long term, maybe right now it's hard to see why that's a liability, but I agree.
Yes.
I think, as time goes on here, because with stuff going on, I mean, they can call Vitalik in front of Congress, in front of the Senate. I mean, they can question him. There is no person they can pull in and question about Bitcoin. So do you think? I take it you think we'll never find out who Satoshi is, like I do.
Yeah, I definitely don't think it's going to be Satoshi coming forward and saying I was Satoshi and here's the proof. I definitely don't think that's going to be the case. But maybe there's a one-off chance that somebody's able to piece something together,
figure it out,
suppose who the person is. Maybe, yeah. I'm not going to rule that one out.
Did you ever think of I never thought of this person until Shinobi brought it up, and I've been obsessed with it for like 10 days now. Is John Nash? Beautiful Mind.
Mm-hmm.
No,
I don't think it's him.
You don't think it's him?
No.
His understanding of game theory is what really, like, I was like, you know what? It is somebody really knew how to play this game. Yeah,
I think the game theory piece is huge, but I think when you look at the person's understanding of mathematics and all the encryption side of it, like you have to have somebody who's just a total savant at mathematics to piece the initial parts of this together from the encryption standpoint. And then just the calculations that were done in order to know the hash rate adjustments and like that kind of stuff. Yeah, I don't think it was him, but who knows? Yeah, who knows?
Yeah. It's just fun to speculate, and that's what the reason it's searching for Satoshi for the documentary is just it's a cool way to, it's like a nice narrative to allure people that aren't Bitcoiners. But yeah, I'm totally giving a spoiler alert. But if you're listening to this podcast, then that means you agree with me and you will watch it anyways. But yeah, it's the ultimate thesis is to prove why we don't need to know, and basically, we all are Satoshi. So yeah, a couple more questions here. So got to ask you about stock to flow, because that's something I have subscribed to, Plan B's model. Because people are all over the place with being critical about it, and saying, oh, it's not this, or it's not that. What do you see behind the validity behind it? I mean, not that it's valid, but you seem to be subscribe to Plan B's theory like I do, that it at least has merit right now. Like Michael Saylor said, some 10 billionaires could come in and buy it and blow up every model. But what brought you into that, and you still follow the stock to flow and think that that's going to play out here in the short term?
Yeah, so I like the model, and what I like about the model is I think it models a rudimentary estimate of what production cost it will be near the end of the 4-year epoch. And how it gets there, like the rate at what it gets there, is all up for interpretation. And I think that might be why there's a lot of people in the community that dislike it. I think one of the most common complaints that you hear against it is, well, it does not account for demand, right? Well, as long as the hash rate's going up, I would tell you there's demand. So, yeah. Because if the hash rate isn't going up, then what that tells you is nobody's going to go out there and dig a hole if somebody isn't buying the dirt. And so what's the proof that somebody's willing to buy the dirt that's being dug up? Well, it's the fact that more and more people keep going out there to dig up more dirt.
The shovels are getting sold left and right. That's
well, and you can see it in the hash rate increase. So when you look at, and Plan B's done, models on other chains, and it doesn't work. And I would argue the reason it doesn't work is because the hash rate is volatile and it's not keeping it just doesn't
not on a steady climb. Yeah,
that's right. So that's why it won't work, is because it's not modeling a consistent rise in hash rate, which is telling you there's a consistent amount of demand that is there at the ready to buy the coins at a rate of 10 minutes per block that's mined. So I think of it like this: like, let's say I was selling lemonade, and
wait, because you have a Dunder Mifflin shirt on, I have to go there with the explain this to me like I'm 10 years, like I'm 8 years old. And then no, explain it to me like I'm 5. Next year, I'll be 6.
Oscar, explain this to me like I'm 5. So
lemonade, yeah.
So lemonade stand, and let's say I set it up there, and there's a line of people ready to buy the lemonade, but I only sell one cup every 10 minutes. Okay, I only have one cup to sell every 10 minutes. Okay, if let's say I'm doing that, and the line's getting longer and longer and longer. Am I going to keep selling my lemonade? Of course I am. Every 10 minutes, as soon as I get it, I'm going to try to sell it. And the line just is always there. Maybe there's one person in line. Maybe there's 10 people in line or whatever. Now imagine imagine that I'm there with the lemonade and there's nobody there to buy it, right? And it takes an hour before even one person shows up. But I'm doing all this work that's associated with getting the cup. I'm pouring it, I'm mixing it up, right? And I'm doing this work, and it has a real cost for me, right? Let's say then I take that lemonade I'm selling it for $1 every 10 minutes. But since there's nobody in line, I can only sell one per hour. And let's say that I'm selling it for 50 cents. So in that scenario, if it costs me $1 to make it, and I'm only selling one per hour and I'm making 50 cents on it, I'm losing money. So what do? I stop doing that activity because there's not enough people that are showing up. There's not enough demand for the work that I'm performing to do that. So the fact that Bitcoin keeps chugging along at its 10-minute blocks and more people are showing up with more and more lemonade stands, that tells me that the demand is keeping pace with the issuance rate. And so when you have that understanding of there's constant demand, okay, and then all the other things that he's doing, the model, what it tells me is it's making an assessment based on the flow of what's coming out and the stock that's been issued, and the demand is constantly there, that I then can model this. Okay, now to Michael Saylor's point, let's say we have a sovereign, I'll take it a step higher, right? Let's say we have a sovereign country that comes in, like a large one, like the US. And they're like, we're going to start putting this in our treasury, right? And we're just going to start printing a bunch of fiat money. We're going to start buying the socks out of this thing. Is stock to flow going to remain a valid model? No.
No, it's
no,
going to
it's
take
not.
off.
But where I think stock to flow does provide a valid model is it's mapping out and it's showing you the production cost of what a miner is going to be willing to sell this for, or basically what your production cost is to make this. And as long as the customers remain in line. And so how am I able to see whether the customers keep showing up at the pace that I'm minting it? By looking at the hash rate keep going.
And you can tell that you're not going to lose that demand because they're there.
Because people are valuing the work that's being performed. Right?
Yeah. So you're getting the value for what you're doing. You know, I mean, if nobody wanted a doctor, why would you go, to med school and put all that energy into it? So that leads me to my next question about electricity. I've heard you mention before, and I wanted to kind of pull on the thread of, to use your term, pull the thread on electricity setting the floor, because I think that I've
as long as hash rate keeps going up.
Yeah. And so I wanted to get your background on, like, that's what you think. I mean, you think as long as hash rate keeps going up, and that's what stock to flow really shows, is that the production cost is going to keep going higher and higher. So when and by the way, this is not financial advice. I, put that out there, but, I subscribe to that when you're looking at things, and I believe in, I DCA and I just hodl. I don't trade or anything like that. But when you see, Bitcoin go from 64 and change or 65 and change, whatever we were at, drop all the way down to 29, is that basically saying, are you saying that it costs 30 grand to mine a Bitcoin? Or
no, I think your production cost is, my model that I'm using is plan B is suggesting that the next level or the next plateau is 100,000. I think that's the price that the current stock to flow is eventually working itself towards during this 4-year period of time. Right. So at $45,000, is Bitcoin underpriced for this epoch? Yes. In my opinion, it is. Am I buying more and with my free cash flows I get each month? Yes.
Oh yeah.
because my opinion is that it's undervalued. Now, if the price ran to, let's say it ran to 200,000 and you're still in this 4-year epoch, is it overvalued? Maybe. Could it be? Yes, it could be. Would it surprise me if the price came back down to the 100,000? Would it surprise me if the price came back down to 60,000 after hitting 200 and then coming and porpoising itself back to 100? It wouldn't surprise me at all. And I think that could totally be in the cards for the next 3 years, is that scenario playing out. But I think that as more and more hashing continues to come online, you're going to find that that it gets more and more competitive for that price. And then what it does is it polarizes the price to that production cost for that specific epoch. Now, where you could be wrong is going back to the scenario that I described earlier with like a sovereign country entering, and you're receiving so much demand for the work that's being performed that the trust in the old system that has such a higher market cap and utility in today's terms, right? Everybody's using the dollar, everybody's using the euro relative to Bitcoin. But if you start getting sovereign countries that are now onboarding and using this as their settlement layer, well, it might just take over and it might not just stop. And that's where you get into the whole super cycle idea. And when that happens, like this whole model of stock to flow and all that I think it all just dies.
Yeah. And that's going to be the Samuel L. Jackson hold on to your butts moment,
Yeah.
When that, that's what everybody that's listening to this, that's why you'll be happy that you stacked it. I'll send you, I don't know if you saw it, but I made a video, like you were saying, putting more cash flows into Bitcoin during this. I made a buy the dip video that was Tom Cruise's character from Tropic Thunder. I don't know if you've ever seen that, the Les Grossman. And it's with him dancing, but I put it to that song, the Opportunity song by Pet Shop Boys. And it was like him dancing, and like it was like about buying the dip, and like you see the Bitcoin price just going up and down, and it was like, selling the car, selling everything, it was just that's basically how the summer has ever since May 17th. That's what I was like, do I have anything I can sell right now in my house that, maybe a lemonade stand, like that's not a bad idea. Lemonade for Bitcoin. So yeah, I think everybody should be buying the dip and going down that route. Well, and I got to ask too, you've got the radio voice, and did you know that before you got into podcasting?
I still don't hear it. It doesn't sound like I do. Like people tell me that, and I'm very humbled and appreciative, but yeah, I don't hear it.
I gotta ask. I wonder if it's a microphone. What microphone do you use?
Well, yeah, and I have very good audio equipment. This is a Heil PR40 is the microphone, but yeah, I mean it's nothing. It's just it happens. Nobody in my life had ever told me that, oh, you should go into radio. Like there's some people you'll hear, like when you're out, you're like, that person should be on the radio. No one had ever told me that in my entire life. So maybe it's much more the audio equipment than anything else.
Yeah. And if you don't mind, I mean, do you have a little bit, like a couple more minutes I want to ask you about the podcast just specifically. Yeah. So I'm sure you've been asked this many times before, but you started the podcast with about 7, 8. Oh, by the way, I do have a funny story to tell you about that with Bitcoin, people getting into Bitcoin. So this lady that I had not seen since I was like 4 years old, one of those like situations, and she's like, oh my God, I haven't seen you since you were a little kid, and like, okay. And she somehow we get into the conversation of investing, and she's telling me about stocks and blah, 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 and all this stuff. And she's like, what do you invest in? And I was like, 100% Bitcoin. And she was like, oh, honey, oh no, no, you shouldn't do that. And she's like going on and on. And I was like, basically got to the point of telling her like, yeah, the entire monetary system that you believe in is going to explode. And Bitcoin is going to be the only thing left standing. But it's so funny. I was trying to think in my head as I'm going through, I'm like, who would be a good person for her to listen to So I'm thinking, you know what, Preston, like, because he came from the value investing, you know what I mean, like long history. So I should tell her to listen to the Investors Podcast, and she'll come to light. And she brings her phone to me to show me who I should listen to for getting into stocks as opposed to Bitcoin. And it's the Investors Podcast. It's your podcast. And I was like, I was just looking at her and I was like, you're not going to believe this. I was like, but have you noticed how Preston is not, like, have you noticed a little different content? She's like, oh yeah, I've been really busy. So she's like, last year's been crazy. I haven't been able to keep up with as much. I was like, well, Preston is the one that like has really helped me understand what the value of Bitcoin is and why I'm in this scenario. And like her mind melted at that point where it was just like, she was just about to tell me, listen to Preston, he'll tell you to get into stocks and value investing. And I was just like, well, this is interesting. So yeah, so that
for anybody listen, I'm really sorry for all the confusion out there. Like, I know I've taken some various turns through the years.
But I mean, for someone that was in value investing, I mean, I think that says a lot for understanding what the value of Bitcoin, and why that is so, why it is what it is, to make that sharp turn, I guess.
For me, it was, well, and it kind of goes back to what I was saying earlier about the business schools teaching these discount cash flow models and them not understanding the underlying unwritten, untalked about rule and assumption, which is you're dealing with the stable currency. Like, nobody asked that question.
Yeah.
I know I never did, until it was just like, why isn't this really, like, why are all these momentum picks just like murdering it? But not just like for a year. Cause in the past you'd have these phases in a market cycle and a credit cycle where like momentum would do really well, but then there was these periods where value would do really well. Well, from 2008, 2009 up until this day, value has not outperformed. It's underperformed momentum. And it's like, well, when's it going to start performing again? Well, why isn't it? Why is this different than anything we had seen in previous credit cycles? And it was because they never let a free and open market ever happen again.
Like, they never let it decide.
They never let creative destruction occur.
Yeah.
So
yeah, if you fail at business, you should fail.
Yeah, I mean, look at what happened with COVID. They were here in the U.S. They were stepping into the market and buying corporate debt, not just like adjusting the federal funds rate. Like, they're literally manipulating the credit worthiness and the ownership of like corporate debt. In Japan, they're literally own like half the equity market. They're effectively nationalizing the free and open equity market, but they're doing it through small equity purchases and not like, oh, this company is now the government's. They're nationalizing everything, and it's just off the charts, nutso crazy, and so when I was first starting out and I was building websites that help people learn this stuff and go through the valuation process of like, hey, how do you value a stock? Well, here you got to have an IRR, an internal rate of return calculation that you're doing on future free cash flows. And you're trying to figure out what that is. Hey, is it better than the 10-year treasury? Well, how much better? That's your risk-free rate. Like, when you're doing those calculations and you're looking at it, and then the calculations are getting compressed, especially that IRR, and you're looking at the internal rate of return, and you're looking at that and you're saying these discount rates that I'm using the value of these companies are getting so compressed, they're going to zero. Yeah. Well, in those equations, when you put the zero on the denominator of the equation, like, that means things go to infinity.
Yeah.
Right. The closer you get to it. Yeah. It just keeps going. And so, I could tell that, like, once we got into this cycle far enough, it started getting to the point I was like, okay, like, clearly they're not going to let up. Clearly they're going to keep compressing these interest rates. Clearly they can't let them normalize. And so how does this resolve itself? Like, what is the solution here? Mm-hmm. And luckily I was fortunate enough to find Bitcoin. And then more importantly, I was fortunate enough to exercise enough critical thinking that got me over the hump of understanding how nuanced it is. And it's very nuanced, like we were talking about earlier. And for a lot of people in finance, they're just not there.
They just want to stick with the status quo.
Yeah, and it's really hard to challenge this when you're making $400,000 a year or more on Wall Street, and you're just like, no, these idiots. Like, why can't they just figure out that the market's just, you always got to be in the market because that's the thing that they chirp amongst each other, and just they never force themselves to say or force themselves to go out into like everyday America and see how people are suffering. They're not seeing the consequences. They're not seeing like the damage that has been done through all of these policies that, like we said earlier, pretty much had to be done.
Yeah.
Even though I don't agree with them.
Yeah. And it is sad. I mean, it kind of like breaks my heart, even like I said, with all the money printing that's happening. And, I swear, like every time I've seen, when I know there's another round of stimulus going out, and then all of a sudden I look around neighborhoods and I see like new trampolines and new consumer products, like all these consume. And I don't know.
The UBI checks they're spent before they even arrive.
Oh yeah. It's mentally like, hey, that's coming. So where are we going to put it? And it's just, I feel bad because people don't know what's happening to them.
Mm-hmm.
They're just unknowingly falling into this trap. And so that's why, I think, we need as many voices out there because it's just, it's unfortunate. But yeah, I found that Bitcoin has made me less consumer,
What's going to be neat, I think, in the coming 5 years is you're going to have, just like the internet, you go back into the 90s and like, a few people were using it. Then all of a sudden, like everybody's using it. Everybody's benefiting from it. That's going to be Bitcoin. I think, especially as you go into these next 5 years, it's going to be like, everyone's talking about that, but these people are crazy I bought a little bit of it and I bought 1%. Now it's like 10% of my portfolio because it just keeps going up. I should probably own more. And then it's going to be like this cascading event. And where it's going to really get interesting is if you're able to hold on to your house on a fixed rate interest rate payment that's in the contract that specifies needs to be paid back in fiat. This is going to be a total windfall for people that like aren't house hopping as these interest rates are going lower. If they're refining the same house, they're staying in the same house, and they've got those terms locked in there, and they're not signing contracts that say that the bank can pretty much maybe redenominate some of the stuff in other terms. Make sure you're paying attention to that fine print here in the coming 5 years. Yeah. There's going to be massive beneficiaries for people that are levered that are able to sustain a job and collect payment and stuff their free cash flows into Bitcoin. Mm-hmm. It's going to be a lot of relief, like way more than I think people are anticipating. Like the world looks really, really dark right now for your common person, but I would tell you we might be at the darkest part of the night here very soon. And it's going to start probably trending in a much more favorable direction for people, especially as Bitcoin gets further and further adopted.
Yeah, I agree. And speaking of the internet, if I can ever host this debate, I'm doing it because it's all Pittsburghers. But Mark Cuban and you,
what an idiot.
It's so funny because I used to have so much respect for him.
You know what? Me too. And as a Pittsburgher, I was always a little bit proud, like, oh yeah, Mark Cuban, he's awesome. Like, I really like the guy. He seems to be like very level-headed and somebody who, just kind of a good dude. But boy, oh boy, his takes on the whole Bitcoin space. Oh my God.
Like completely swing and miss. It's just funny too, because like I'm sure like he has an open email address, but he and I have like at least a handful of emails back and forth, like where I've just picked his brain on random things. So I was always like, nice Pittsburgher. And then all of a sudden I see him just go down this shitcoin route. I'm like, oh, well. And the
issue for me, like the literally the point where I was just like, I will never, like, this guy's dead to me, is when he went on Ellen and was there like telling her audience, you need to go buy Dogecoin. And I was just like, I'm done. Like, you know what, dude, you're dead to me. Like, you have a platform, a massive platform to reach out and influence people. And you're out there like pushing a dog coin that has no developers, has nothing, like no layer to nothing, right? It's a disaster. It's a joke.
Yeah.
It's a joke. And here he is pushing that on a show like that. I was like, dude, you are so washed up. You are not the person you were when you were reading operators manuals down in Texas. Trying to break into the scene, into the tech scene. Like, you are not that person anymore. And so, whatever, he moves on and I move on and whatever.
It's the same thing I had with Elon, where I do a good job, I think, of just like, I assume I try to not hold people in like this high, like,
yeah, you can't
idolize people.
No.
But I always respected Elon a lot. And then I actually put out a thread. This was before I probably had like 200 followers at this time. So, but like, I put out a thread about the Doge thing, where I was just like, kind of like what you said about with Mark going on Ellen. I was like, it's just gonna hurt unsuspecting people. That's what bothers me about it. I don't care what Elon says about Bitcoin, because Bitcoin doesn't care what Elon says.
Yeah.
But yeah, it's the Doge thing and getting into all that really turned me off to him. And like they say, it just kind of slays your heroes. But
one by one.
Yeah, one by one they keep going down.
If there's one thing I've learned, if you've got bad incentives, Bitcoin will find a way to express it in a very public way.
Yeah, that's so true. And keep those incentives aligned in the right way. Well, Preston, I could take up your time asking questions all about the podcast and everything, but maybe we save that for another time down the road. And we can do a podcast about making podcasts and and give people, because to me, honestly, I think in the next 6 to 9 months, we're going to see an explosion of new podcasts coming on, which is a great thing. So yeah, maybe we'll do that in a little bit here to kind of give, and maybe I'll have more success at that point. So, but thanks for coming on. I appreciate it.
Hey, my pleasure. And thanks for reaching out.
Yep.
Yinzer awesome.
Yinzer awesome.